Is there inflation in Minneapolis, Jim Paulsen?
Absolutely, Tom. It's cranking up. Just all the things you guys are talking about. If you go to the grocery store, my tea I drink every day, the green leaf tea.
There's two tea drinkers on the show now.
Gone right through the roof. There's definitely inflation here. When you fill up, we fill up at the pump, it's back up there to close to $50 out here again. So it's very noticeable. There's no doubt about it, and I think bond markets finally starting to pick that up as well, Tom.
Jim, it doesn't have to be bad for corporate America. Margins so far have been really decent. They've surprised to the upside. Do you think they can remain insulated into the new year?
I still do lean, Jonathan, towards the transitory side of this. But I think it's going to be long. Transitory is going to prove longer than what we expected, and even what the Fed expected. And the result of that could be we're going to get pretty worried about inflation, I think, and that could be what brings finally a stock market correction at some point. But I still think, in essence, the underlying cause of this is the roller coaster ride that COVID put the world economy into. When you push the corporate America into a depressionary bust and tell them they have to survive a pandemic, and they cut back operations to the bone to do that, and then you give them a wartime boom within a year, there's just no way they can catch up. So inventory to GDP ratio is one of the lowest in post-war history right now. And I think it's just going to take time for the supply side to catch up. However, if we keep making it worse, with another $3.5 trillion of demand-side spending coming, I don't know. I don't know what that'll mean. But I do think ultimately supply catches up, and this proves to be a really big inflation scare that we get through.
All right, so let's say, Jim, that in about 20 minutes' time, we get a much bigger than expected inflation print. Let's say it's broad-based. Let's say it shows that prices have been increasing pretty rapidly. As an investor, what do you do with that information?
Well, the bond market's going to get killed again. We'll be looking at something north of 150. Well, I think we'll be looking at something north of 150 in a hurry, Lisa, on the 10-year. If what you say, the way you put that out there, does come to pass. And the real question will be, can the stock market handle that? Right now, as yields are going up, I think it's sort of increasing confidence that the economy is hanging in there, the economy is likely to do better, that the message of the bond market, which had been, maybe weakening economy on the back of the Delta COVID variant, maybe now the bond market's telling us that that's going to peak and economic activity is going to pick up. But if this is due to, only due to inflation and not growth, I'm not sure how the stock market will react to that. Certainly, more materials-oriented stocks hold up better. Growth gets even pounded worse. But I don't know if the whole market can hold up as well.
I mean, to the two of you, Jim and John, Lisa and I say thank you to the St. Louis Fed, who actually have an inflation series for tea in consumer packages, and to channel Ted Lasso.
That's good to know, Tom.
John Farrow, garbage water inflation is up 49% since the beginning of the pandemic.
Garbage water inflation.
Yeah,
is that what we're calling tea?
That's what Ted Lasso.
You may have offended a lot more people than the British public, Tom, but we'll leave that there. You brought up the St. Louis Fed. Let's talk about the Boston Fed and wrap things up there.
Yeah.
Eric Rosengren to AP spoke to an investor yesterday evening that I have tremendous amount of respect for, who said, look to those comments. So here are those comments, Jim. If you continue to purchase assets, the reaction primarily is in pricing, not so much employment. I don't think asset purchases are having the desired impact on really promoting employment. Jim, your take on that, do you agree?
Well, I think that I think that the fiscal juice has been much more important in reboosting the economy than has been quantitative easing. I really do. There's just so much excess liquidity, Jonathan. A lot of it's sitting on the sidelines. A lot of it's sitting in idle accounts. That there's not near the punch to monetary as there used to be. I think low rates, though, also have helped growth and employment a lot. Just look at what it's done, mortgage rates to the housing industry, construction in general, auto sales and the like. I think that's a lot of it. So one part of monetary policy, not necessarily QE, I think has been a big contributor, but fiscal, I think, has been the biggest. I would say this, and it's somewhat comforting and not focused on enough.
Okay.
The M2 money supply has fallen dramatically from like 26% growth down to like 8 or 9% growth, almost back to normal growth rates already. And at the same time, the annual rate of growth in QE has also fallen already. If you buy the same amount every month, but the base goes up, the growth rate declines. So I would argue that we're already a long ways into tapering, and it's not really appreciated. We've been tapering since March, both QE and the M2 money supply, and that might come home to pay dividends, perhaps in starting to lessen inflationary pressure as we get into next year. The fact that someone was tightening, even if it wasn't the Fed.